The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome. What do we got here? Okay. We've got a lot of stuff going on. I just got a bunch of emails here. Okay. Welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach? But I don't have my soundboard up just yet. I was very distracted today. I probably should have gotten a few things done. But you know what? I'm all caught up now.
The following takes place between 2 p.m. and 3 p.m.
So what do we have happening? Well, I don't know how you can say it anything other than massive blowout numbers. The flu was so bad that the numbers were kind of down. No one thought that these numbers could be anywhere close to this. In fact, many of the pros on Wall Street went short last night at the bell, bought puts. And I don't know what else you can say about it than that. It's just a miraculous move in the economy of the United States that's almost biblical in nature. Right now, we're up 39 on the S&P. Dow's up 30. The Dow's up 377, and the Nasdaq's up 107. So, what is my call on this? Well, storm clouds. Those storm clouds are volume. We had probably one of the lightest volume moves from the open till noon that we've had, I think, this year. It was fairly light. Starting to pick up more volume now in the CBOE total volume, where we've been doing about 7 billion shares a day. We're at 3.9 billion right now. If you want to look at the at just the floor, well, not just the floor traded, but the New York traded shares, we're at just at 1.9 billion shares. I mean, that is, for the 40-point move in the S&P cash, not just sort of bad, but absolutely pathetic that we can move 40 points in the S&Ps and see 1.9 billion shares. That's got to tell you something out here, and I think it's telling you, guess what? It's telling you, I don't know how that got back up there. Oh, I got two of them. That's what it is. Okay. What is it telling you? It's telling you, I think, that these great numbers add up to one thing, and that's more and faster rate hikes coming in the near future. And, of course, we only get to the 20th and 21st before we have the FOMC again. This may be as good as it gets for a little while, with the Fed slamming on the brakes anytime that we see big numbers like this. And I think they'll ripple through. Now, long before this ever started, even a year and a half ago, most models said that the zero interest rates were worth about 30 to 35% of the earnings of the S&P 500 stocks. That if you instantly changed it and the market didn't do anything other than naturally react, i.e. didn't crash, that would take off, basically 35% of the earnings. Now, probably not going to anywhere close to 5%, especially in the next 2 years. But, we're looking at a good 1% now, I think, in the rest of the year. Now, how quickly does the market start focusing on that? Do they have a little party here? I think the volume's telling already that they're already looking at it, and that people are using this and thinking of this as an opportunity to get out of the market just until the Fed comes back in and there's, again, a little bit of sector rotation, and a few other things. So markets go up, markets go down, and markets hit highs, and very few people ever have the will to sell them. Now, does this mean everything is headed down next week? The answer is no. I do think that there are some very, very huge opportunities in the market. And I started on those today. I bought something a little afternoon in the way of a put for next Friday's expiration. That put for 50 cents could be worth $5. I think it's going to be worth at least $2, at least some part of next week. There's a handful of other ones. If I am wrong, I will lose a very tiny bit. But if I'm right, I won't make just a tiny bit. I will make 5, 10, maybe 20 times my money in this coming week. And I don't need the market to fall apart or crash to do that. All I need is a few of these puts to get back into the money that people are throwing out with the bath water today. So just think about it. Maybe there's an opportunity. Well, certainly if you're long and you think that the market can do nothing but go higher, insurance, at least for the next week, couldn't be any cheaper. So that'll be it. So anyway, I'm thinking that there's certain opportunities, especially in equities and the options on those equities and far out of the money. And we'll see how those do. But I appreciate that I got or at least the opportunity today to go after some of these. And we'll talk about maybe this and more throughout the day. What do we have also going on here? Well, time for a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1959, 11 inches tall, a waterfall of blonde hair, Barbie is the first mass-produced toy doll in the United States with adult features. The woman behind Barbie was Ruth Handler, who also co-founded Mattel. Her husband in 1945, I guess that was at the time, after seeing her young daughter ignore her baby dolls to play with make-believe paper dolls of adult women, Handler realized that it was an important niche in the market for toys that allowed girls to imagine the future. Of course, if you missed it this morning in the news too, Toys R Us is going belly up. It is assuming room temperature. It is joining the people in the vestibule. It is an ex-parrot, at least here in the United States. And, of course, that put a little bit of hurt on both Hasbro and Mattel today. Maybe we'll get a chance to look at their stocks, too. But I don't know if they're doing better. They were down significantly pre-market. But on this day in 1959, and, of course, now one of the biggest drags on Mattel and others is that none of these toys seem to be selling very well at all. We'll be back, start looking at some stocks, talking some big ideas, waiting with bated breath. Yeah, I'll put a worm on my tongue. For callers at 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And Baker Hughes rig count numbers were out at 1. U.S. rig count is up 3 from last week to 984. That's compared to what was it? Last year up to, it was 600 and some odd. U.S. rig count is up 216 rigs from last year's count of 768 this time, with oil rigs up 179, gas rigs up 37. And if you've ever wondered why it's hard for gas or crude and gasoline to get higher here, although we had a big bounce in it, continues to be one of those things where anywhere in this $50 to $60 range, they keep adding supply every week. One thing is it sucks to be in offshore rigs, apparently. The rig count for offshore rigs is down 1 to 13 and down 7 rigs from last year's count of 20. My guess is that BP dropped the proverbial, what would you call it? Baby Ruth in the punch bowl of offshore rig insurance, and it's tough. You got to fly people out there. Still going to be tough. Those rigs will eventually see a price where they come back online. But man, I don't think that is there any hope for offshore rigs? We'd have to have a major supply disruption, I think, to see anything that happened. But man, 7 rigs from last year's high of 20 rigs. Do you see that? Is there an opportunity where we have 0 rigs offshore on the U.S. coast? I don't know. Interesting idea. Okay, so that's about it for the Baker Hughes numbers. Was there anything else I saw out here? Don't think so. We'll start looking at some of these charts and maybe some of these volumes. And let's take a look at some of the high flyers. Netflix, who's had some real turkey movies lately, doesn't seem to matter much. A couple other movies are going to apparently have just been slammed. And that's the issue. And Netflix has had one thing that other media companies haven't had, and that is it's priced like an internet company, even though it probably should be priced like a media company. And media companies and movie companies have a long and jaded history of turning a bunch of turkeys out over a number of years and seeing their studios go bankrupt. Of course, Netflix buying a lot of this stuff from other folks. But the question is whether or not they're going to have anything that exciting in the near future. Apparently, there's a couple of things, and that's all they need to do to keep people from canceling. But, you know, is it better than TV? Yeah. Does that mean that they're going to need to keep raising rates until they get to the $20 HBO a month kind of thing? I don't know. But I can tell you one thing, and that is when we were at this price back on the 6th, we had 18.2 million shares. We got 10.2 million shares today. So, again, I'm kind of long-term bullish. I'm just short-term waiting for this market to start figuring out that what we have is something that is probably going to have to answer to higher rates in the markets. I continue to think that we're going to see most likely next week the TLT test this 116 and 116.51 lows. You went down lower today. You haven't really gone higher. Volume's kind of light at 3.7 million shares so far, but we are pretty much down this kind of sideline range. Now, maybe we get down to this 116, 1550 area, and the volume dries up and we bounce. But my guess is that we are going to test that, just like we're going to test 92 on the dollar index. They've thrown everything at it today. Dollar index right now is below, it's $90.05. They threw everything they could at it at $90.35. Got it to $90. It bounced fairly decently. But my guess is this is going to slowly and steadily make its way to 92. If it's going to be going lower, I think it goes lower from that $92 level. And a lot of this, I think, is going to have, I think the dollar and I think the TLT are all set up for moves into next week and into the end of next week and through the FOMC meeting. I think we're going to probably see a lot of people stirring the double-barreled shotgun of higher interest rates long before we go to that meeting on the 21st and Powell's first meeting. They're going to start thinking about it. But I already guarantee the Fed's looking at a 40-point move in the S&P cash. They're looking at this monster jobs number, and they are scared poopless about inflation coming and them being way behind the curve. A lot of discussion already about them being behind the curve before. Let's take a look at some of the other biggins out here. What was that? Married with Family? What was that name of that show? Amazon up a little bit today. Again, this one's not getting a lot of love so far. 2 days ago, we had 4.1 million shares. Yesterday, 3.8 million shares. Today, 2.9 million shares today. So maybe this gets poured on by the end of the day. Not a lot of shorts in this. You broke out above the previous high that had 11 million shares. You never really got that either. So I would not be surprised to see this come back and close under 1,500 once again until we start seeing some more juice on the way upside. Again, I'm not saying that Amazon is the stock you should short. In fact, it's probably the only stock that I wouldn't think you'd want to short just because of the risk reward. But interesting pattern. Let's look at some others. Johnny from somewhere asks about IBM. You kind of came up in here. This thing's only going sideways at 160. This thing's going to have resistance at this level for a while. It's up on no volume today, 2.8 million shares compared to the 6.4 million shares on the downside yesterday. You got 4 million share highs on February 27th. The big down day of the 5th of February, you had 8.7 million shares, and you're into that. And even 5 million shares on the 2nd of February. So all these things are kind of up on fairly light volume. Okay, question. Would you say that Netflix stock flow is linked to Amazon, that Netflix will hold as long as Amazon does, please? Okay, well, we got to answer 2 questions now. They're stacking up. You still have time to give me a call at 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Got a lot of questions. TLT, do you think it could actually go higher? And the answer is yes, but I think this thing really looks like at a minimum, they're going to wash everybody out at 116. And if you're thinking the other way, I think it can break through. It's been making energy for a while. It looks extremely bearish to me, but I would say the test at 116, 115.50 is going to tell us everything we need to know. Another question in here is about Lam Research. What do I look at that one? You're going against an 8 million share high. That 8 million share high is January 25th, 218.48. Today we've got 4.6 million shares. So let's say you end up with 6 million shares for the day. You're still going to be a little light. I do like the move in this one. This one has done a little bit better than the rest. And of course, we look at IBB, and that's the energy just has never really come in it. The last 5 trading days, the volume's decreased every day as you've gone back up. I thought the sector was going to be a lot stronger than it was. Other things that kind of interesting to me is this Net Element stock that ran, and it basically ran a bunch of shorts out with, I guess, a few things that kind of made it sound like these guys are now into more Bitcoin-y kind of things, and of course, also that we've got John Najarian in it. I was looking through things. I posted it in the den. Tom O'Brien talked about it a little bit. But when a stock pops like this, it's pretty easy to tell when something runs 70% that there's something up. Now, the question is, if there's nothing up, then is this just a kind of a pump and dump one-day story? It kind of pulled back a little bit. They've run a little, folks, in this. So I went through all the press releases, and other than Najarian saying that he's going to be part of it, John Najarian, there was just one thing in there that sounded like maybe these guys had something that no one else had. And part of it was this: they handle GRP risks. Well, I've written contracts for every one of these different kind of Bitcoin things that have contracts. I played kind of a little with them, thinking that maybe there was some money in them. I never really understood it to point other than it's a technology. And I understand technologies are good and can be profitable. But none of these things are really patentable. Almost all of them depend on things that are in the public sector and have been for a long time. Blockchain isn't protected. Merkle trees aren't protected. People, in fact, I'm going to talk with Tom about this at 3:30, about how Bitcoin and Bitcoiny things and blockchain are kind of thrown around like Kleenex. If you were asking for bounty towels to pick something up, it's kind of lost their meaning as if you were asking for toilet paper and you got Kleenex, or you got bounty, the quicker picker upper, or you got even newspaper. Yeah, they all paper. Yeah, but they aren't all Kleenex or tissues. And man, are people throwing away things or throwing around words that mean things that they have no real idea what they mean. And anyway, this one was interesting because it had that one little part. So while Tom was on the air yesterday before I went on, I called down to this company to investment to actually tech support and then customer care and a handful of other things, asking them what risk R or GPR was, or G whatever it was, G something R. I Googled it, couldn't find anything. Absolutely no idea what this risk thing is that they talk about that looked like the German pound or something for the abbreviation. Called investor support this morning, right at 9 o'clock. Got the instant voicemail message machine, called back in 5 minutes. Got the instant voicemail machine, left a message, never got anything returned. I know that these guys are probably busy. But other than the fact Najarian put his name on the side of this bus, there's not much there. And that always makes me nervous when people get into a gambling mood, because I know that it will end up exactly like Bitcoin, where you're going to get at least a 50% haircut. My guess is that you're going to get down to $5,000 on Bitcoin. And there's no technology or technical analysis of that. It's based on one thing, and that is patterns and risk taking when people trade things that they have no idea what they are. My guess is that this is kind of close. It probably had a huge short issue in the thing at $6. So you bounced 70% or now probably 100%. But what's there? Well, you can't find anything on their website. You only have a nebulous thing that maybe it might be in the press release yesterday. And I dug through it. I spent 30 minutes on it. Can't find a darn thing that would make me think that this thing should have jumped 70% yesterday. When I see stocks like that and others that I've been long in, where gambling is the word of the day, I am always cautious when everybody else is giddy. I am always greedy when everybody is ready to throw in the towel. Generally, that's been a great way for me to make money. Can we look at CLF? We will. You know, this is kind of what I described last night in the show, and I probably should have done a better job, but there are a ton of stocks that look like this. So let's go ahead and go to the game film on this one. And I think you all know what I'm going to show here, don't you? I hope everybody's learned what I look at here. May not be right, but it's the first thing I see almost instantaneously. And what is that? A big fat triangle. And again, what you want to wait for is the breakout of that triangle and fade the other side. I suspect that today's breakout in the S&P is exactly that. We're popping higher, and within 2 or 3 days, we're probably going to see this thing back in the trading range and maybe even to the lower part of the trading range. At least that's what I'm speculating. I'm not doing it with equities where if it goes up $10, I make $10. If it goes down $10, I lose $10. I have highly leveraged positions with incredibly low ability to lose money. And that's always where I want to be. Okay, what else do we have? Anyway, triangle patterns, and there are hundreds of them. I could have probably done 500 of these today, and all these charts look the exact same way. It's not that far from looking at some of these other ones. I mean, you've got, let's go back and look at these. We looked at them last night a little bit, but my guess is at the close tonight, we're going to see a great deal of these stocks or these sectors out here that have popped up to places where I would say I'd want to sell them. And then if we look at the volume chart, I think they're going to come in and show us that they are incredibly light. Let's look at this broker-dealer ETF when I come back. IAI.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
S&P's up 40, the Dow's up 383, the Nasdaq's up 112, and this is not a Jeopardy question. Who is Cohen? I was promised 1,000 points down in the Dow earlier this week if somebody named Cohen left. I don't know how this is possible. You mean one person leaves, the entire wheels fall off the economy, and we're going down 1,000 points. Yeah, maybe the best thing is not to listen to the Dancing Bear on CNBC. Just a thought. You can be right or wrong, and I'm always hedging my bets. But to be sure, just spout things off because you feel that way, probably not a good investment philosophy, especially when you have such that kind of elitist thinking that makes you think that literally if your guy isn't there, the whole world's going to fall apart. Pretty stupid. Anyway, we're up 40 points on the S&P cash. Dow's up 383. Nasdaq's up 110. Who's Gary Cohen? Is that all forgotten? Already over? 1 day and it's done? 2 days and it's done? Okay. Just a thought. Okay, now what we want to do is look at some of these other sectors. And as I said, a lot of these in my sector oscillators are right back up to the point where you'd want to be selling them if you can. My guess is these things are going to spike a little higher. Now, do these things instantly roll over in 1 or 2 days? No, they don't. But generally, it does give you a pretty good indication. And this one's the IYH. So let's take a look at that one real quick. IYH. You know, kind of up here to resistance. You really, you used a lot of energy, 4 or 5 days to come up here to the previous high. Now, this isn't a high volume ETF. But February 27th, you had 82,000 shares. Today, we got a whole bunch of 21,000 shares. So, again, like I said, let's go back and look at this again here. Okay, 4.3 billion shares on the U.S. equity market volume summary from the CBOE. Used to be known as BATS, now the CBOE. So with 4.3 billion shares, how do we compare? Well, today we probably should have had 8 or 9 billion shares. So right now, the way I'm looking at it, even with a Friday, we probably should have had 7.5 billion shares. If we get to 6.3 billion shares today on this, I think I will be surprised. As always, it's been problematic if you can get to the start of this show at 2 p.m. without seeing somewhere around 2.4 billion shares, or 2.4 billion shares on the New York Consolidated tape. Right now, we've got 2.1 billion shares, a little over that, but not much. So it is if we were flat on the day or up or down 5 points in the S&P cash, literally no one would be blinking at the low volume today. They'd just say, hey, the market didn't go anywhere and the volume didn't do anything. Well, we went somewhere and the volume didn't do anything. It didn't go out there and see that flag, pulled up the flagpole in Peoria and see if anybody saluted. Well, nobody did. Not much in the way of volume today. So just be wary. Doesn't mean that the market falls off in a day, but I do think that there's a great opportunity for a pullback next week. And that's what I'm looking at. Which ETF? The IYH? Don't know. People ask me half questions, and when I look back here to read them 2 minutes later, okay, hard to know. Okay, so anyway, we've got a lot of these sectors out here, and they're up here hitting, in this case, some fairly high volume down days just ahead of us. This IYH is really just knocking at the door of this candle on the downside of the 31st of January. That had 475,000 shares, and again, we're pushing 22,000 shares today. So these things are within a hair's breadth of massive resistance, and they have zero in the way of volume. Just to give you an idea how some of these things are doing. Now, let's go to my favorite that kind of led the entire market kind of coming back to us, and that was this one that is just the REITs. Let's take a look and see how this one's doing today. The VNQ. This one has been right at these highs. This is what makes me think that there's a great opportunity for that retest next week of the TLT 115, 116 area. My sector oscillator has hit a high. We've got a little doji out here yesterday. Let's zoom out of that a little bit so you guys can see it a little better. So let's go take a look and see what's happening actually in that ETF VNQ. Now, remember, this is REITs, and REITs are all set up on what volume can do for you, i.e., if rates go higher, then probably your giant shopping mall is worth less. Second doji in a day, and yesterday we had a doji. Today we got a doji. What do we have? On the 7th, we had 9.9 million shares. Yesterday, we had 6.4 million shares. Today, 4.3 million shares so far. So these things are up here. There isn't a lot of juice. If we look at the previous highs in this, February 20th, we had 15.2 million shares. So again, this is the one that let us down. Let's go back and look at it. I think everybody remembers me saying that we were in for some trouble if this thing broke below this $80 level, because this thing had been kind of bouncing back and forth. And this was the clue that ended up seeing the bonds and the rest of the thing after Janet Yellen threw a hand grenade into the trading floor on that Thursday and kind of blew the thing apart. We've come down to this lower level. The energy on the way back up is not exciting. Certainly the volume is not. And we have that high volume low on February 9th at 72.05 to test. It's got 12 million shares down there. We kind of got into it with 8 million shares, but my guess is we're going to work our way down and test that 72.05 from the February 9th low. You can give me a call at 877-927-6648. What else do we have out here? Okay. MU, take a quick look at it, and then we'll look at the SMHs. Big engulfing candle today. I guess not that big. but an engulfing candle. Today, volume's okay, not all that exciting. You really haven't seen a big push in volume, kind of a little one with 70 million shares on the 5th. This thing has kind of come out. We got 54 million shares today. So I guess not off that bad. My guess is that this comes back down to about $50, where this thing really took off. That's where support is probably going to be on this one. So let's take a look at seeing the SMHs would bring that back in that, if there's anything in those. Well, we're going to go to the break. We've broken out in the SMHs. We'll talk about this when we come back. But surprise, surprise, anywhere near 4 million shares today? Yeah, 3 million shares. Not as bad as it could be. We'll be back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, we're having a grand day today. Certainly, markets higher. S&P's up 40, Dow's up 370, Nasdaq's up 110. But I suspect that we're going to see the specter of the Fed loom and put its shadows over the market next week as most people think about higher interest rates over the time and what that will do to forward earnings. And maybe we're just a little bit too exuberant, maybe an irrational exuberance We just need to get maybe a lot of that kind of taken out between now and the FOMC meeting, or even at the FOMC meeting. We might be a little, but what we aren't a little bit ahead of is the incredible light volume. You've pretty much been coming down every day on the semis. You're up a little higher out here today. Let's take a look at the IWM before we leave for the day. This one's kind of probably right at that 782 level. Volume today is 16.8 million shares compared, and what it should had for the February 27th high at 28 million shares. Especially if you look at the 33 million shares down on the 2nd of February as this thing's breaking back through. Energy's not all that exciting off the lows. This may be one of the stronger sectors out here. So you got to take a look at that. In the next hour, at the bottom of the next hour, I'll be with Tom O'Brien. We'll be talking technologies. I've got some very cool new technologies and materials that we're going to talk about, some other things too. Over the weekend, if you're in Tampa, St. Pete, especially St. Pete, if you're going to the Grand Prix of St. Pete, you might find me around the scoring booth where I'll be helping out. And I think that's about it. Catch me with Tom next hour, talking technology. In the meantime, sell when you can, not when you have to. We will see you here Monday. Same bat channel, same bat.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.